Good afternoon or evening, everybody. It's Tim Knight here. It's the first video update I've done in like a month. I haven't felt real irrationally exuberant about talking about the stock market for a while, for understandable reasons. Today was one of the odder days that we've seen. Of course, yesterday on Sunday I was watching the debate on C-SPAN and the vote, and at the same time watching the ES, and it was quite interesting. As we zoom in here, we can see on Friday had a bit of a healthcare fear coming in, and then on Sunday, as it became apparent that this thing might pass, and indeed did pass, the ES started to fall even more. And when I got in front of the screens this morning, ES was down, I think, 8.5, and it looked like the market was kind of frowning on the notion of the healthcare bill. As is plainly evident, not only did the day wipe away the entirety of those 8.5 points, but in fact padded onto already obscene gains that the market has enjoyed over the past year. I think that just about every major index had an up day, some to new recovery highs. The Indu, for example, was up 44 points to a brand spanking new high, the S&P and so forth. We're going to step through these in just a moment. I was going to just kind of walk through some index charts today. For those who had read the blog earlier today, I had mentioned that although the old Tim would have just kind of let his stops do their work, the new Tim, which is the result of the insanity recently, is a lot more skeptical about bearish profits staying intact. And looking at where the market opened this morning, I just really had a feeling that I should get out of my big shorts, and I did. And I'm so grateful for that. The cubes, for example, I right at the open covered them, and thank goodness. I did not expect. I didn't know what to expect today. I certainly didn't expect nearly 1% rise in most of the indexes. The point I'm making is that had I simply let things be, it would have been a much nastier day than it was. In point of fact, I nailed some good profits on those big shorts, and also, as I mentioned, Las Vegas Sands. I entered into the day long on this. I actually got stopped out and re-entered, and when it was all done, had a nice gain on Las Vegas. So that's a very pretty chart. Anyway, at the moment, I have 8 longs and 67 shorts, most of them teeny little fellas. Really nothing of great size. I do have a rather new short in IWM. That's the only one really of consequence. Now, I was just going to spend the video thumbing through some indexes. They are in a particular order. It's alphabetical. So I'll just, some of these I'll just bounce right past, others I'll talk a bit about. Here's the NASDAQ Composite. I had said a week or so ago that this was approaching this major trend line, which goes all the way back to March 2000, as well as this trend line, which, sorry, a little interruption there, which goes back to 1990. So these are long trend lines going decades, and the price hasn't exactly dropped to its knees in fear at these lines. It has hasn't just run over them like a truck, but it definitely is just keeps going higher. So it's just a little over both of them at this point. I know that in technical analysis, one of the favorite words is like overshoot, which to me is kind of like it's kind of cheating in a way. I mean, I'm a little more rigorous about my lines than that. So overshoot or not, the trend lines have been violated. and I don't know if that makes them moot. The trend line going back 20 years, I'm not going to dismiss quite so easily. I'm going to leave them up, but it is not encouraging to see that kind of action. Commodities looks a little more bearish, I would say, than equities. Those are looking rather vulnerable, I would say, at this point. What else have we got? China, I would also somewhat vulnerable. I still have my FXI short position. I came into the day with a number of European shorts and so forth, and I got out of those. But the FXI, I'm still in. The gold bugs index, HUI, I haven't really monkeyed around much with precious metals just because it is such a peculiar market. But I say again that what we're seeing right now here looks just so similar to what we saw back in late 07, early 08. I hope it materializes in the way it did before, because that preceded a very handsome drop in all asset classes. So I'm neither long nor short gold or silver right now, but if forced, to make a bet for the next, I don't know, year, I guess I would choose the short side. But luckily we don't have to lock ourselves in for a year, so I'm not doing anything with that. Indu I mentioned earlier. I actually, if I had to buy an index, I guess this one would be the one, just because I can more clearly kind of see what elbow room it has. I do believe that this line here at 11,280 has some amount of meaning, because once it fell away from that back in autumn of 08, it was just straight down. So I do believe that this line, which was very substantial resistance before 07 and somewhat substantial support in 08, I do think that line has some meaning. However, it is several hundred points away. So, that's a little bit off in the future. Mid caps up over 1% today, approaching pre-crash highs at this point. We're getting, in some cases, into the area where Lehman Brothers was in business and Bear Stearns was in business and all was right with the world. So that's the stock market is valuing businesses as if none of this ever happened. NDX, I mentioned before, these fan lines, we are still beneath that, but you can be beneath an ascending line and keep climbing, of course, forever. So that's not necessarily hugely meaningful. These lines, these fib lines, haven't had a whole lot of, live and in person, kaboing, I really it just didn't represent anything. I don't think that's very useful, so it's gone. Forget it. What else in the little bit of time we got left? Russell 2000. This one is, I'm always fascinated by the Russell, but this one is so interesting. It's beneath this big trend line here, but as I said a moment ago, things can keep climbing underneath an ascending trend line until the cows come home. IWM is a short that entered rather late today, but it's also one with a pretty tight stop. I mean, we're just a few points away from, I hate post-recovery. I wish it was lifetime highs. It's so much easier to say, but post-recovery highs, we're just so close that I would be stopped out quite quickly were that to take place. But that is one very sharply ascending graph. And just to wrap up the VIX here, one of the things I'm thankful for is not to have been involved in options for a very long time. I've never really done anything but just buy the puts. I don't sell them or anything like that. But anyone who had bought into puts is just almost guaranteed to lose over the past year, because the volatility, setting aside the fact that asset prices are going up, volatility seems to be approaching pre-crash levels. Just nuts. Anyway, that's it for me. Not a lot of guidance here. It's all very murky. I just thought this day couldn't pass without a bit of commentary, considering the interesting reversal we had. No one would argue that the rest of the week should be fascinating to watch. All right, that's it. Good night. I'm going to walk the dog.